Welcome to another episode of the Profitable Home Services Podcast. So glad that you chose to join us today. My guest for this episode is Mark Williams. He comes to us as a long-term builder. So he's going to give us a different perspective out here to all of our home service businesses who have been following this podcast so faithfully. So Mark, welcome to the program.
Well, thanks, Diane. Thanks for having me on.
Yeah, I'm excited to see a little different side because so many of our guests have really been in the trenches of the home services industry. They might be vendors that are to HVAC companies, or they might be vendors to an electrical company, those types of things. But to step back as a builder, that's a little bit different perspective than what we've done so far. So I know you're going to have all kinds of wonderful, wise words to share with our listeners this episode.
Well, I'll certainly share a number of things not to do. Not sure I can tell you all the things to do, but I can definitely tell you 20 years of building, you learn a thing or two. Had some great people around me. And, like anything, everyone goes to the school of hard knocks. I think we all learn probably the best by falling flat on our face. And I have definitely done that a lot in my career. And, we even started a podcast on top of it, the Curious Builder podcast, where basically we talk about the same things that you're talking about, with other home builders, architects, designers, because everyone that runs a business, I don't care if you're, if you're producing, nuts and bolts or screws or screwdrivers or 2x4s, or you're a builder or a HVAC or an electrician, everyone, hire, fire, everyone's running a business. In some ways, I'd argue that 70% of all businesses are the same. It's maybe the 30% that is the specialization that makes you unique and different than the other businesses. But everyone has to pay taxes. Everyone has to, account. Everyone has to sell. And so in some ways, it's so relatable. Business is a very common language. And I think that's why, as an entrepreneur, we all sort of can speak the same language and relate to other people's struggles and successes. And hopefully through the platform of your podcast and others out there, we can apply it to our own business and become more profitable.
And hopefully, by listening to a podcast like yours or like mine, we can save somebody else from falling flat on their face and having to figure out how to dig themselves out. Because as we were talking offline ahead of time, that takes time to have to fall flat on your face, figure out how to get out of whatever you've done, figure out how to fix it, and that becomes expensive. And I know myself, I've done that many times in all the years I've been in business, and those are expensive lessons to learn.
I mean, I'll start with probably the most painful one that I've learned probably about 3 years ago. As I mentioned, I've been building for 20 years. A lot of builders, I should say, I don't know about the rest of your listeners, but a lot of builders get into building because they're handy or they're good at building, and they're really good at crafting or designing, and they're really good with clients. And so they're really good at the structure, project management, the building thing. You think to be a builder, you've got to build stuff. But very few builders are also great business owners at the same time. I mean, there's only so many things you can be good at. Now you can learn it and get better, and it's not that, they're all terrible. But I've also seen a lot of builders that come from a corporate background, that come from a business owning background, and they do extremely well because they know financials. They understand how to run a business. They might know less about building a house, but guess what? You can actually hire that out. Turns out you can also probably hire out running a business too, coaching and, mentors and things like that. But in some ways, I would argue running a business is harder than building a house. And I would say the business side of it, if you can have that down, the thing that you do or produce, you could either hire an operations manager or a marketer. So really the fundamental thing that makes business owners and entrepreneurs different is probably their level of knowledge and how to be an operator as a business owner. Would you agree with that?
I totally agree with that. As I'm coaching and talking with home service businesses, one of their biggest areas that they struggle with is knowing their numbers, knowing how to actually calculate the difference between margin and markup and those types of things. They think they understand what they're doing. And then all of a sudden somebody explains it to them. The light bulb goes on and they're like, oh my goodness, what have I been doing? I have been giving away X% for however many years. And I know you can talk to that because you had mentioned before that you had made that same mistake yourself.
Yeah, I mean, I was told, my dad was a builder, and this was back in the 70s and 80s. When I got one of his sworn construction statements, which is essentially your performa or your bid sheet behind, building a home. When I did my first spec home, excuse me, 12% was sort of what you did. And so, okay, I did 12%. We'll just pick easy numbers. Let's say it's $100 and I did 12%. So, obviously but what I was really doing is I was charging, let's just pick 10% because it's easier. I was really selling the home for $90 and I'm selling it for 100. That 10% is not 10%. It's actually less than that.
It
What I
is.
should have been charging the house for is, like 105 or 110, above the cost structure. And that was never explained to me. And in past, this is also, I thought my CPA was amazing, and he is, but I would have appreciated a lesson somewhere along the time that, hey, if you charge margin, you can actually make more. And there's a way around this. You could also just charge more markup. And that's kind of there's another way to kind of, do that. So like if in this example, if I was making 12% markup, I think 12% margin is 15% markup roughly. You can correct me if I'm wrong. So you can scale that markup. You just have to charge more. And so I think the biggest thing most entrepreneurs make a mistake in is we don't charge enough for our work. And I think the reason we don't charge enough for our work, whatever it is we aren't as clear on our numbers. So if you get clear on what it costs to run a business, you're going to charge more. I just, we produce a podcast, and they've exploded. They're producing, 7 or 8 podcasts. And he called me the other day and he said, Mark, I'm sorry, I have to add, $1,000 a month to our editing and production bills because I sat down with my CPA. And it turns out my numbers are a lot different than I thought they were. And as a business owner, I don't love to hear that, but at least I understand it.
Mhm.
And I understand that, like, the number that he quoted me, it feels good. It seems like a good relationship, but that's not actually what it costs him to do that. He has to charge me more. And guess what? If I like that level of service, then that's what I want. And everything comes down to a value proposition. Do you like this HVAC supplier? Do you like this electrician? Do you like the drywall? Do you like me as a builder? At the end of the day, if you're doing good work, if you're making your client happy, they will pay you a reasonable amount of money. And especially, I think the reason podcasts are so important is we need our entire field to elevate. And,
Yep.
for my sake, for my builders, like all builders need to charge more than they're charging because I think personally, I think I have undercharged for 20 years. And I heard something recently that I really resonated with, that we go through 3 phases in our career. It's the learn, earn, and return. And I jokingly often say on my podcast that I've missed the earning phase and I just did learning and returning. And so now I need to go back to second base and figure out the earning part because, to your point earlier on, a lot of the stuff you don't get to learn until you go through it. That's the learning phase. And then once you've learned it and you can apply it, that should be your earning phase. And then usually later in your career, most people get into kind of what you're doing right now and what I'm doing, which is I want to return these lessons and I want to apply these lessons to my own business because I don't want other entrepreneurs to fall down the same hole. Because if you can avoid it, then it elevates the whole field. And here's the best part. Just because I share, quote, the secret sauce, I mean, it's just education.
It
And
is.
like, who's going to argue that education is bad? I don't get, it's not like I'm giving you an advantage over me, even if we're head-to-head competitors. Guess what? Being head-to-head competitors, if we're both charging the same rate, let's say I build in the luxury market. If we're both building 2 to 3, let's just pick a number. Let's say I'm building a $3 million house and my competitor does really good work, but he's charging 2.7, $300,000 less. Our client is going to go with him because he's less, but here's the deal. He's actually not making money.
He's
And at
not.
some point he will not be around to service that house or do what he needs to do to take care of his client. And as an industry, we are hurt. And so it's better if we were all operating on the same. Now you can't price fix, that's illegal, it's a monopoly. But at least if we're all saying the same thing and doing the same thing, like now the client doesn't have to pick on price, which I would argue should not be the most important thing. The thing that should be most important in terms of like building a luxury home, it takes a couple of years to build, should be your relationship. It should be who do you want to spend 2 to 3 years of your time with. It should not be who's just the cheapest. Because when has anyone bought something you're like, yes, this is my most favorite thing I've ever bought because it was the cheapest thing I ever bought? Says nobody.
Nobody. No.
Anyway, that's my soapbox. I'm off now. You can talk for a while.
And I'll say in the era that we're living in, relationship is way more important than it used to be. I think we've moved past the transaction into building a relationship. Whether you're an electrician, a roofer, an HVAC, it doesn't matter. You're still building a relationship, and your goal is to have your customer come back to you time and time again, their family members coming back to you. If you're a builder, same type of thing. They're not going to need another house in the next year or two. But if a family member does, or a friend does, if we can build that relationship, that is gold. And oh, go ahead.
Well, just that if you have, if you are making more money, I look back in my career and I think which one of my clients did I was asked this question the other day, which homes did I make the most profit on? Oddly enough, they're also my best clients.
Yes.
And and I'm not alone in that. I've asked other builders this question and other industry members. I think it might be a universal thing. And I suspect that a couple things happen when this happens. One is when your client asks for something, you're like, I got it. I'll take care of it. It's something minor, right? Like, hey, will you do this? I'm like, no, I've got it. You've been a great client. Let me take care of it. So like now your customer service is going through the roof and they're
Yes.
like, wow, they already liked you already, but now like they perceive it as free and you perceive it as like, they've been an amazing person. So let me just do this for you. So your client's skills and client services, increase dramatically. The second part that cannot be understated is your attitude. If you go to a job site with a little pep in your step and you're just kind of excited, like it from your smile, your body language, the way you interact, the way you talk, the positivity in your voice, like all those things matter. Add that out over a course of a couple of years. Is the client going to remember what you said, or are they going to remember how you made them feel? And I would argue they're going to remember how you made them feel in that spirit of generosity. And I'm not saying everything is transactional. You're not thinking about this on purpose, thinking like, oh, I'm making more money than I thought I am, so I'm going to be nice. But I think the opposite is true. I think because you are not scraping by for, just pennies on the dollar, and you're actually making a living, you can now give them your time. You can go above and beyond the call of duty. You can give them even more service. And guess what? They like you even more because of it. So it becomes this like real positive spin wheel. That's been my experience. I don't know if you can speak to this at all.
I will agree, coming at it from the accounting side of things. My best clients, I do all kinds of extra things for them, and they are my most profitable clients. And I love them to death because they're not nitpicking and they're not tearing things apart and they're not second guessing me on things like that. So we have a great relationship, and you're able to do more for them and still stay in the profitability range that you need to. I was going to mention a little, going back to our conversation earlier with knowing the numbers and your costs. I am amazed, and I shouldn't be by now, but I still am amazed at how many people in the home service industry or in the construction industry don't know their numbers well enough to know what their employees are actually costing them. They
And I
think
and I
they
would
do.
say, so when it comes
Yeah.
to, I can speak to that a little bit. When it comes to the cost of the home, I'm very good. So I mean, we have a sworn construction statement. Let's just say pick an easy number. Let's call it $1 million. And let's say your lumber package is 200,000. As you're getting receipts, you can mark off until you get to that number, right? And so what the problem that most builders have run into historically is they were doing this manually with, Excel spreadsheets or whatever. And so they were always in arrears, or even if you got a bill, it was very cumbersome. And so you might not realize that 200,000 that you actually exceeded that, and that you're at 220,000. And if you're in a fixed bid model, you just lost $20,000 off your bottom line. If you're in a cost plus model, you have to make sure that you charge the client for it, because you're entitled to that, because that's a cost plus. That's one of the advantages of a cost plus. However, you better be able to explain it, and you better be able to tell your client it can't just show up at the end. You hear these crazy stories where a builder will show up at closing and be like, hey, here's 50 change orders for $100,000. And the homeowner's like, what? I haven't heard, because they ran their book so sloppy. They didn't know
Yes.
their true number till the end. And I think everyone who's owned a business, at least, but predating Excel and sort of some of the advantages that we have now, would understand that now some of the technology is so advanced that it can help us learn that or even avoid that altogether. Maybe like if you started your company in the last couple of years, I think there's software out there that you'll won't ever have to go through that. We partnered with a company called Adaptive. Oddly enough, I actually recorded an episode with them this morning on my podcast, and they are a 2-year-old company that uses AI technology to they cost code every single invoice, and it's specifically for construction. And they, because it is complicated because of the number of line items we have, we might have 200 to 300 line items on a house. And, we're employing hundreds, if not thousands of people, between the company, we hire a painting company, but then they hire, 50 people. So in the aggregate, it's just a lot of people. But what is so clever about Adaptive is it will cost code every single invoice against your budget in real time, and then
Oh,
you
wow.
can ACH pay those directly. So if let's just go back to this lumber bill of 200 grand. So let's say it comes in at 50,000 for the trusses and windows. Great. And it'll say like, okay, category has 200,000. This invoice is 50, pay or not pay. Well, you look through it, you approve it with your project manager, you pay it. Okay. Now that the next column over says you have 150,000 less to draw on, or left to draw on. So you still have 100. So you're never ever going to get to the case where you paid a bill that was higher than what you had left to draw on. The system will actually air out, and you can override it if you want, but you're going to be an idiot because you really are going to know. And that is the time that you create a change order. So let's just say during the build, the homeowner added a sun porch or a deck or whatever, it was 10 grand. That would be your trigger to say, okay, this deck is going to cost you 10,000. Now you increase that budget. But the reason I'm bringing this up and kind of going into depth about it is now all those numbers are there for you to see. And not only can you see it, but the technology is calling it out for you, making it super simple. So it now allows you as the business owner to spend more time on an analysis and actually making judgment calls versus spending a large part of your time just shuffling paper and just documenting it. Because I would argue that the number one reason people are behind on their numbers is because they either don't make the time or they don't like it, which
I don't like it.
honestly, those are probably
Mhm.
the same thing because we don't
Probably,
make
yeah.
time for the things that we don't like. And if you've worked if you have a sole entrepreneur out there who's, let's say you're a framer and you're, Monday through Friday outside in the sun or cold or wherever you are pounding nails, the last thing you want to do is go look at a bunch of invoices at night. You're tired. You want to go to sleep or whatever. And so I find that it's even harder for the people that do a lot of work themselves. If you have an operation where you have a dedicated bookkeeper or dedicated people in the office that can actually do this, I mean, that's their job, then they're less prone to some of these mistakes and some of these errors. But anyway.
Yeah. But I think it all comes down to how can we come up with a system so we know our numbers and keep that profit from leaking out, whether it's building a house or whether it's putting a roof on a house. They're similar enough that here again, if your price went up from the time you quoted the job to the time you put the roof on the house and you weren't paying attention and your bill went up 15%, but you didn't pass that on to the customer, you just lost that profit. So I think just sometimes we're busy and we're not paying attention, and these invisible profit leaks just tend to leak out, and we don't realize it till later. Later, you sit down and you look at that job and you kind of go, oh, it's too late now. That job was done 2 months ago. Too late now.
I think one of the hidden profit, like we were speaking about this a little bit before offline, for me, part of it's a mindset. I've always been better at going and getting one more sale than fixing a drip, leak. I guess in this analogy, I'm like, I'm better at going, a tanker full of water and filling up my, my reservoir than fixing the leak. And there's probably some magic in doing both, because ultimately, if you're not putting water in it, the leak isn't going to matter. There's nothing to leak. I think the one thing that you could maybe this is the silver lining, is if you find a leak, rest assured that you've been running a business that has been leaking. If you find a leak, if you do the work to figure it out, you now have become instantly more profitable because that's affecting your cost. And if it doesn't affect the work you're actually doing, that's instant profit. So I think, for me, the easy one was obviously the difference between markup and margin. Boom. I just made, significant amount of money. That's a pretty big leak, actually. That's a
That's
giant
a very
leak.
big leak.
That's a Grand Canyon leak, actually. That's a pretty
Yeah.
bad one. But the other ones that I think that we see a lot of is you had mentioned people. I don't think I still to this day, that is probably my next hurdle that I need to work on for my company is people time. And one of the hard parts for me is finding I think we call it the burden rate. What is your employee cost? We'll just pick a salary. Let's say you pay a project manager $100,000. The hard part that I have is like if you had two homes that started on January 1st and ended on December 31st exactly perfectly, and you could say, great, okay, my project manager, I'm going to divide his salary in half, 50,000 to this house A and 50,000 to house B. Great, no problem. You know what? You didn't really need to know your cost burden. You really got it nailed. You're fine. But here's the reality. No one on the planet can plan a house or will a client go for that kind of thing. So it's like what really becomes challenging for me is allocating like, okay, you've got, if you're a small company like me, it's like, okay, the project manager's running one remodel, two remodels, one new home. Oh, by the way, I have a past client who needs some punch list stuff. I mean, ultimately, I am not, I know I mean, just on this podcast makes me want to go back and actually dive in to figure it out because I know right now I am solving it with him, but what I really need to do is figure out if I had to replace my project manager with like two people, what would I have to pay those two people? So it allows you to then make better hires, and it also lets you know what you need to hire somebody for because you might find someone you really like, and let's say the position is 100,000. That's what you can afford, or that's what the previous person was that you were employing. But what if the cost of that person is actually like 130, 150,000 because you're not factoring in, a bunch of other things, or even worse, double whammy is it costs you that much, but guess what? That employee says, no, I'm sorry, inflation's a little higher this year. I actually want you to pay me 115 already. And so if you don't know your numbers, not only he's not efficiently representing the company by no fault of his own. It's just simply you don't know your own numbers. It's funny because we would never build a house that way, but yet somehow we employ people that way. And I'm telling you right now, I still do that. And that's something that I need to fix.
One of my favorite things that I get to do in my coaching program is we pull out this program called our labor burden calculator program. And in there, we drill down into each employee's costs. We know what their salary amount is. We know what the benefits are and the perks and things that employer is giving them. We look at their unproductive time, so windshield time, all those kinds of things, meeting time, sick, vacation, all those areas that they're not on the producing side of things. Then we start factoring in the company's overhead. And so we can do a cost and then a fully burdened cost complete with overhead. And every time we run that exercise, somebody has this gasp type moment of, oh, I thought it was only X amount, and it's always considerably higher than they thought it was going to be.
Can you do that for non-employees too? I mean, let's
Yes,
say like
you
so
can put your subs in there.
that was I mean,
Yes.
I'm thinking of like specifically about marketing. So like I have a marketing admin who I would like to make my employee someday, but she has, some childcare stuff at home. And so right now she's in a flexible work model until she can come on full time. So let's just say she's 40% of the time. Could I use that labor burden model to calculate sort of against my overhead what I need to sort of
Good.
factor in?
Yes, you could. It's a pretty cool tool and it's very eye-opening. I have not had anybody go through it and not have that little gasp of a moment because, we all are told, oh, just mark it up a certain percentage and you're good. And off you go and you do your bids and you do everything based on that certain percentage. But in reality, it's always higher. And so it's been a great exercise for my coaching clients to go through. And it does change how they do their pricing going forward. It causes them to increase their rates because they've had this silent profit leak going on that they weren't even aware of in the cost of that employee. And then it's nice that you can do a what if scenario. What if I raise this person from 100,000 to 115? What's my new rate? Because it's got to be carried out somewhere. Just like when minimum wage went from, let's say, $7, $8, $10 to 15 or $20, like kind of that it is nowadays. What does that do to the cost of the burger? That $5 burger is now $8, $9, $10, $12 because they had to pass that cost on. Same thing in our world. We have to pass those costs on.
This is more of a high level economics question, but you're a good person maybe to ask this question too. Why we seem pretty quick to adjust to material costs. Why is labor so slow to adjust, not only for wages, but also for then pricing model? So like, let's just, I mean, you used a good example of, the minimum wage, but let's go back to this $100,000 project manager for a company. Let's say you've kept them at that rate for a couple of years. But the cost of living keeps going up regardless if you pay them or not. And I think most smaller entrepreneurs, while they check in with their people, I can just speak for myself. We check in a couple times. We check in, I think, 3 times a year with our people. How you doing? How do you feel like you're fairly compensated? All those types of questions. But the economy doesn't care about your feelings.
No.
Inflation's up, what, 8%, year over year, whatever it is. And so it's like I had one younger employee one time say, inflation, this was right when, coming out of COVID, I think he was like, hey, inflation is up, 5%. I would like a 5% raise. And, a little bit because he asked for it and a little bit because it was logical. And I said, okay, I'll give you a 5% raise. I mean, I get it. That's the first time in 20 years I've ever had anyone use inflation to get a pay raise.
Mhm.
Now, the inflation has been pretty dramatic here in the last couple of years, and so I can see the logic. I guess my question to you is, why in general is labor the last thing to adjust? And then once it does adjust, it never goes back.
It never does. No. And I'm going to guess that it probably is the last thing to adjust because it's not an easy, quick number to figure out. You can look at your price when you get your invoice from your vendor, and I can see, oh, okay, I'm now paying 20% more than I was paying last year. But your employees, it's such a conglomeration of numbers to get to what the actual cost of that employee is. It's not just here's what I'm paying them per hour or per salary, whatever it might be, per unit, it's made up of a whole bunch of other numbers. And if numbers isn't your favorite game, you're going to put your efforts elsewhere. I'll get to that someday. It's on my to-do list, my wish list. And then that someday doesn't come until the employee says, hey, I need an increase, or I'm going to go work for Joe, who happens to be your competitor. And so that forces it then. But I think it's because it's made up of so many numbers that it's not a quick, easy thing to adjust.
I think also when you look at, I've done this before where I actually showed the burn calculator to the employee. Right? Because, they're making, let's say again, this example of $100,000. That is, you would know this. That cost the company probably what, 125, 135?
About 130, 35.
So it's
Yep.
35,000 more than they're being
More.
paid. But I think sometimes actually, if that employee has owned a business before, obviously they're going to be more open to understanding that. But most employees have not. And I think showing them like, hey, this is as a company, like I would love to pay you more. What I'm currently exploring is, at a certain point, there's certain caps on what you can pay people. But how do you incentivize people to, obviously a lot of people are motivated by money. Sometimes people are motivated by time off, things like that. And so one of the things that I want to do, and this is even going back to why you should charge more margin on your whatever you're selling or services you're doing, is if you have more money, you can set certain benchmarks and then entice your employees and say, you know what, if we make, if our goal this year is to make, 20% margin on everything, I'm just picking a random number. If we can hit every 2% that we make more than that goal, I'm going to give my employees, profit sharing. It's 1%. It's not, I didn't invent it. It's just really, it seems, how the mechanics of the specifics of it, I am not, knowledgeable enough to speak on it. But I feel like that would be a really powerful way to motivate your people. And it's something that I'm currently exploring for the end of this year and then the beginning of next. How often do you see, that work to sort of make up maybe a pay gap? Because if the company is more profitable than they thought it was going to be, and the employees got you there, it would also sort of incentivize, would it be, I know it would incentivize me as someone who's very sales driven.
I'm seeing more of that than I used to see because we can put together some sort of an incentive package that those who got you there get to reap the rewards along with you. And this is where Profit First comes in handy. We've been able to set up an account and we're putting some extra money away throughout the course of the year. And then we're able to split that between ourselves and our employees. And that gives you that bucket and it doesn't accidentally get spent on something else.
So speaking of that, let's just say, again, we'll just pick easy numbers. Let's just say you, and my understanding of the Profit First model is every time, let's just say you put it at 10%. So for every check that you get, you're taking 10% off the top and you're putting it in this account. So at the end of the year, you've said, okay, we've hit 10%. So let's just say you hit 10% of whatever your business model is. And let's just say you have 100,000 profit at the end of the year.
Mhm.
But let's say as a company, you said, hey, we got 100 grand. We need to go, we did pretty good this year. Plus we hit our profit, but we also hit the 10%, I don't know if this is a bonus model or what. And we need to go buy 2 more trucks, or, we need to buy some land, or we need to basically invest or pay down some debt. How does that work? Because you could sort of see how employees would be disenfranchised with that. Because let's say I have 100,000 and I'm like, you know what? I have, let's say, a $500,000 mortgage on an office building I own. And you're like, you know what? I'm going to take the 100,000 and I'm actually going to pay 100,000 off of my mortgage. And now you show zero, you paid everyone's salaries, but the company, how would that work? I mean, obviously you tick off your
Yeah, I
employees
didn't
for
want to
one
do that.
thing. Yeah. But I mean, I know, like, if you didn't have any employees, so I think sometimes a lot of business owners, this is the fault of, you need to treat yourself like an employee. And I
Right.
think that's a different mindset too.
Mhm.
But, and I'm not saying this is right or wrong, because when I have an S corp, right? So I pay taxes, as under my own name, even though I have a company, right? They pass through. I don't have the
Mhm.
corporate veil. And so for me, if I did have extra money, I might say, you know what, I'm going to buy a car this year because, I want the depreciation. It's a little bit different when you don't have a profit model. I know, can you speak a little bit to how you
Sure.
make business decisions? Because then how would you save up enough money with profit to then go make a capital expense? If it's
Mhm.
great if your company's making a lot of money, but even Google or Facebook or these giant companies, they obviously have models that they're sharing with their employees or dividends to publicly traded companies, but you still have to go back and buy buildings and, make some capital investments with your profit. How do they balance that?
So what I see in my coaching clients is they will have several different bank accounts under the profit first model. They'll have their operating expense bank account. We'll have a profit account for the owner, because the owner wears 2 hats. One hat is you're the employee in the business, you're doing your job. And then the other hat is I'm an owner. I took the risk to start this business. Therefore, a certain piece of that profit's mine. And I put it off in my profit account and I protect it.
So is
Then we'll
that
have,
different than the company profit account? So let's just go
it
back to
can
this.
be.
Let's
Yes.
just say, we said you made 100 grand or 10%, we were
Right.
saying in this example. So that's the company profit. So
And the owner may be putting away 5 or 6% as
of
their
that,
piece of the profit.
I gotcha.
Yeah. So we might have another account for future expansion or future growth. And there's that piece of land or that truck that we need to buy. We're putting money away in there. We may end up with another account for this bonus program, incentive program. And each month that we exceed our goal, we take a percentage of that money and put that over in that account. And then
Okay,
that's what funds the
that
employees.
okay, that makes more sense.
Yeah.
And I assume obviously in a bigger company, you'd have to define these rules,
Pretty
with
good.
obviously your
Yeah.
employee, because I mean, obviously you couldn't be commingling those accounts, even if it's all profit. You wouldn't want to tell it's also, I'm being genuine, but obviously you could be very disingenuous and say like, well, I don't want to pay my employees bonuses, so I'm just going to take all of it and
Right.
do, whatever with
Yeah.
it. So that makes more sense. If you have
Yeah.
100,000, you would just say, fine, the bonus structure is just 5% of whatever the profits are, and then, or 10%, pick 10
Whatever it is.
buckets.
Right.
Yeah,
Mhm.
pick 10 buckets. I mean, I like this. It's kind of like
Yeah.
advanced planning. I mean, okay, that makes a
It
lot of sense.
works nicely because then the owner at any particular time can see what's in these different buckets. Now, your tax bucket, you've put money in and it's time to make an estimated payment. So then the money comes out, payment's made. Keep putting money in, make the next estimated payment. So that one goes up and down, up and down. Your owner profit account, we look at that every quarter. We take a distribution to the owner for their profit account. And that is for the owner to do what they wish with it. It does not get reinvested back into the company. So some owners will take maybe half of their profit account and they'll go do whatever they want personally. Maybe they're buying a rental property or they're doing something along those lines. The other half may stay within the company to pay down some debt, or it may stay within the company and be used for a different purpose. So it just kind of depends. Each company's a little bit unique on how we handle that. But we do always fund that tax account. We fund the profit account. I like to also get an emergency fund set in there. If we can have that emergency fund, even if it's only 1 or 2% going in there, when something like COVID happens, or many years ago, I lived in California. We had a major earthquake, leveled over half of our town, shut off the cash flow, was gone. Here today and gone tomorrow, that fast. Now, back then I had never heard of Profit First. The book hadn't been written yet. And so I remember panicking. How am I going to make payroll? Well, if we have our emergency fund and we've been funding it on a regular basis, that will help you limp along for a while, and it'll supplement whatever other income could potentially come in. So we can take a lot of stress off of an owner and off of a business by funding these accounts and then staying in integrity with yourself with these accounts and treating them as if you weren't the owner of them. You know, they're no longer your money. They're protected monies. And that has worked well, and it's allowed incentive programs to actually happen because the employees see that this money is being put into these accounts as you continue to exceed your goals.
So I'm making notes here. I'm like,
Mhm.
I'm already adjusting some of my profit first mentality of like some other buckets that would go. So, I mean, essentially, let's just say you pick 10%. So 10% of everything that comes in, you would take off the table to put into a account. But in this case, you could take 10% and have 10 separate accounts. So you would say, I'm going to allocate 1% to, tax, to whatever. And then basically you just pick your number and then just stay true to it with everything that comes in.
Yeah.
Yep.
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 And track it. I have my people tracking it on a spreadsheet so that they can watch the number grow.
I mean, wouldn't it just grow in the bank account itself?
It is, but it's kind of nice on the spreadsheet because they can say, oops, I missed a week. Because I have my people doing it every Monday morning. So we look at what came in for last week. Some of my clients have a cost of goods sold account. And so they know for every dollar that comes in, this percentage gets put to the cost of goods sold account so they can pay all their vendors. That money doesn't accidentally get spent.
Right.
And I always say, from the business owner perspective, you pull up your phone and you look at your phone, it's like, woohoo, there's $100,000 in the bank account. But in reality, payroll is on Friday.
Yep.
So payroll is going to cost you $35,000. You've got some accounts payable that's got to come out of there. You may have a renewal of an insurance policy. Let's say that's 10 or 12,000. I mean, it just starts dribbling it away, and that 100,000, what's really available to be spent might be 20 or 25,000. So let's put that other money and get it out to where what they see is the 20, 25,000 in that operating expense account.
Right.
And they make a different decision than when they see 100,000 in there. Woohoo, I can go do any number of things. And the in-house bookkeeper is like, oh, no, this stuff's coming up. But the owner, oh, I see this money, I'm going to go spend it.
Right. Yeah.
So Profit First can save a lot of relationships because oftentimes the person doing the books tends to be a spouse. Not always, but a lot. And that really causes friction at home.
Mm-hmm.
Because that spouse is trying to keep everything paid, and the other person who's the business owner is off doing whatever, chasing shiny objects sometimes.
Right.
So we can curb the shiny objects a little bit.
Well, that's where WIP report is so helpful too. I mean, that's like another background, right? So work in progress. I mean, we do that, once a month, against the homes, anyway, we won't go through all the WIP reports now, but that really tells you of that. That's another way to verify of the, your bank account. Let's say you get $1 million deposit, for a big, easy number, that doesn't mean that $1 million is all yours, right? If the house is only 10% done, that only 100,000 of that million is actually yours.
Right.
And, and so, making sure that you're allocating, your money correctly.
And push that other money off into a different account until it is ready to be spent.
Mm-hmm. Yeah,
Yeah.
we do that with all, I mean, we're talking big numbers here, but with
Mhm.
our large homes, when I take a deposit from a client, we set up a separate bank account for that client.
Mhm.
I know a software you don't need to, but I like optically seeing it like in a separate little silo.
Right.
And so like, yeah, you own your whole farm, but it's kind of nice to know, well, that silo right there has, wheat in it. That silo has corn. It just makes it easier for me just to kind of see, okay,
Yes.
that client's money we have not used. And, um, yeah, and you could also at any point in time say, okay, that deposit, how much of that I can realize and can put it into the profit account if I wish. So,
Did you hear horror stories from the
yeah,
customer side?
and you can see why.
Yeah.
I mean, it's pretty easy actually. It's easy when things are going good. Money's coming in, money's going out, money's coming in, money's going out. I think well, hopefully nobody's trying to do a Ponzi scheme on purpose. But, ultimately what happens is I think probably incompetence and lack of knowing your numbers has probably sunk more ships than driving, than espionage, if in this dumb
Yes.
example. But it's
Yes.
like, I think people just start paying bills because they got the money, and then before they know it, they get to the end and like, wait a minute, I've spent all my customer deposits. I bought a new truck, I did this, that, and another thing, but wait a minute, that money wasn't even mine. And now you got to figure out, do you sell that truck? Do you pull a line of credit against your house? I mean, it just is, it's not right, because you shouldn't be doing that. But again, in my opinion, most people are not doing that purposely. Most people are not doing that. I think they're doing it by accident. I think they're doing it
I
because
think
they
it is
don't
too.
actually know, what they're doing. It's a little bit like driving a car without a gas gauge, and you're like, well, man, I'm doing great. You're like, but are you? Do you even know how much gas is actually in your gas gauge? You have no idea.
Right. And I think it all goes back down to that knowing your numbers.
Hmm.
If you don't know your numbers, then these things can happen way more easily than if you know your numbers.
Yep.
And that's why I love Profit First so much, because it allows us to keep a better handle on the cash and protect it. I even have people put it in multiple banks if they're not self-disciplined enough,
Hmm.
and
I've heard
and
it. Yep.
with no internet access to it. Brutal. You're gonna have to drive over and take money out as a way to slow them down sometimes.
Hmm.
And they'll laugh, but it's, hey, if that's what it takes, that's what it takes.
Hmm.
We all have different levels of self-discipline.
Hmm.
And so sometimes we'll string it out over 5, 6, 7, 8 banks just to be able to keep that business as profitable as we possibly can.
Wow, that's a lot of banks. I've never
It
heard
is a
that one
lot of
before.
banks. Other times we can put it all in one bank. I know Mike in the book suggests that you put them in different banks.
Hmm.
Um, and it just depends on the person,
Yep.
and we all know where our weaknesses are.
Hmm.
And if it needs to be an inconvenience to go pull money, then let's make it an inconvenience.
That's funny. I'm thinking about, like, I'm a big runner, and so I'm thinking about, let's say, dieting. And so my wife and I have often argued in the past, like, she can have, let's say, chips or snacks in the house, and then she can self-regulate. But if I see a bag of chips in the house, I'll destroy the whole bag. I'll eat all of them. And I've often argued, I said, and she'll say, like, you can't control yourself. I'm like, yeah, I can. I just don't buy the bag of chips. I keep it at the grocery store, if and so I don't actually need to go get it. If it's not in the house, I'm not going to eat it. And so there's your separate bank. So,
Yes.
keep it in a separate bank. I kind of like the idea that you cut off internet access. I mean, you could obviously tell your banker,
Yeah. I don't
what
want
you,
no online banking for
yeah,
those accounts.
yep.
Yeah.
I mean, you could even set it like, unless, you could even have like a, double authentication, just like you do on your phone. Like,
Yes.
they make
Yep.
you have the code be like, I request on a Friday, but you have to wait 1 week before you give me any deposit, so it'd be just kind of, there's a number of ways you could kind of do that.
Yeah. Whatever it takes, because every person's different.
Hmm.
And that's the beauty of this, is we can work within each person's, makeup, however they're wired,
Hmm.
and make this thing work. So yeah, so many profit leaks in a business. And it doesn't matter whether you're building a house, or if you're rewiring a house, or you're putting a roof on it, or you're installing an HVAC system, or fixing a leaky sink or a toilet or something. It makes no difference. We're all the same in that we're trying to run a profitable business. And running a business is not our first skill level. Almost everybody went into business because they're good at whatever it is that they're doing.
Right.
Very few of them went into business because I'm good at running a business.
Right.
I'll
I would
learn
agree.
how the other part when I get
That's
there.
why you can see when people are successful, they sell their business and they do another one. You know, the track record there is quite good. They've
Mhm.
learned a lot of those principles.
Right.
Now, I mean, you could run anything. I mean, even talking now about business after 20 years, you know, you're like, oh, wait, I guess I am more of a, I don't consider myself an expert, but the fact that you've done so many things wrong,
Mhm.
you sort of become an expert by, learning all the mistakes. So,
Yes. Well, Mark, I hate to say this, but we are running out of time. I think you and I could keep going for another hour.
there's lots of things to fix.
There is. I want to thank you so much for coming on the program today, sharing this wonderful expertise and educational, your 20 years worth of education zapped down into a few minutes for us. And just wanted to just give you an opportunity. If people want to learn more about you and your business and your podcast, where can they go?
Yep. So our building company, we build out of Minneapolis, Minnesota. And so that the name of that company is Mark Williams Custom Homes. You can find us at MDW, or what is it? MDWilliamsHomes.com. And then our podcast. So we've got the Curious Builder podcast. We're weekly. We interview builders, architects, designers, financial firms all over the country. We're also doing a lot of local networking groups. We're doing some retreats. We've got about 7 different business platforms off the Curious Builder, the brand. So it sounds like a lot of your listeners are in the construction field. So even if they're not in building, I really like stories. So we focus a lot on the entrepreneur's journey on those podcasts. And then of course you can find us on Instagram at both of those handles, either Curious Builder or Mark Williams Custom Homes, and you'll find us.
Great. Thank you again, Mark. This has been great.
Very
And
good.
just, yeah, for sake of our listeners, I want to thank you for taking your time. I know your time's valuable. Thank you for spending some time with us. And remember, it's not how much you make on the top line, it's how much you keep on the bottom line. Because we see time and time and time and time again that people thinking they can just sell their way to profits, but yet their business is leaking profits right and left. So once again, thank you for joining us on this episode of the Profitable Home Services Podcast.